This
Fine.
conference will now be
Got
recorded.
up early. So very motivational speak.
The most hard-working seven-letter word is success, no? To get success, tremendous hard work is needed. Tremendous determination is needed. Tremendous patience is needed. Tremendous knowledge is needed. और आजकल के लड़कों को तो वो नॉलेज भी नहीं होता है. एक स्कूल में एक टीचर ने, हिस्ट्री टीचर ने एक लड़के से पूछा, बेटा, in which battle did Tipu Sultan die? The guy said in his last battle. उसको पूछा, where was the Declaration of Independence signed? At the bottom of the page. When was Gandhiji born? On his birthday. State does Ganga flow? Liquid state. If you have 6 mangoes and you have to distribute among 20 people, how will you do it? I'll make mango milkshake. You need to have a lot of patience, and we will fail. When you want to achieve success in your career, in your academics, in your business, in your profession, we will fail. And that's the example of the giraffe. When the baby giraffe is born, falls from such a high distance straight on the ground, the mother positions herself right above the baby giraffe. And guess what she does first? Gives it a hard kick. बच्चे का जन्म होता है और माँ आगे हाथ से लात मारती है. तो बच्चा समझता नहीं, अभी तो आया है जिंदगी में, अगर लात मारा, एक और लात मारा. लात का मतलब क्या मालूम नहीं, अचानक एक झटका मिलता है उसको. So as it is coming out of that impact, झटका, the mother gives a second harder kick. Now the guy understands. अगर मैं कुछ किया नहीं, तो ये चलता रहेगा सिलसिला. So this baby giraffe starts getting up on its wobbly legs, on its wobbly legs. And as the baby giraffe gets up on the wobbly leg, थोड़ा खड़ा होना सीखा ना, एक और लात मारती है माँ. Gets up and starts running. And then the mother giraffe goes, hugs the baby and starts kissing the baby. You know why? Because the baby giraffe's flesh is very soft and supple, and hyenas and lions love it. The mother knows that I can't be with the baby giraffe all the time. I have to go and get food for the baby. How would I protect it? इसलिए पहले एक ऐसी लात मारो कि ये उठ ना सीखे, और फिर जैसे थोड़ा उठा ना, तो एक और लात मारो तो याद रहेगा, फिर उठ ना सीखे. जिंदगी की माँ मदर जिराफ जैसी कई बार लात मारती है. We fail, we should get up, and we fail again, we should get up. And like I always say, don't just go through life, grow through life.
One of the nice, inspiring speech. They say that your karmas are your life lessons, right?
December 10th, 1940.
So your karmas are your life lessons, which we all have to learn. Till we do not learn, we do not make it. Right? Welcome. Great. So time for revision. So how is your revision going, my friends? Great. In the money option, when your spot greater than strike for the call, the money option for the call, the spot is equal to the strike. Out of money option, the strike is greater than the spot. Similarly, for put option, in the money, strike greater than spot. The money, spot is equal to the strike, and out of the money, spot greater than strike. So we discussed what are the things to be looked in open interest. Point number one, whenever there is an increase in open interest, it is assumed that the writers of the call and put are increasing position. Point number two, whenever there is a decrease in open interest, it means that the writers of the call and put are reducing the position. We discussed yesterday sensitivity, moment the call writer who has written his position and the underlying starts trading above his strike price, his obligation coming. He is obligated, so he can have unlimited loss. So the writer is sensitive, he will square off his position. While the buyer knows that he cannot lose more than the premium invested. So buyer can hold his positions knowing fully well that his loss is limited. Similarly, for the put option, moment the writer or the seller sees that the underlying is trading below its strike price, his obligation and potential for unlimited loss sets in. So he's going to rush to cover. So now we understand that the writer is more sensitive in the option chain and in the option world. So at the same time, if I know that the call strikes, the writer is in command, the put strike, the writer is in command. So I know that the seller of a call, he feels that the particular strike will not be crossed. So out of money call, resistance, which has highest open interest. Out of the money put, which is highest open interest, support. Are we clear with it? Other than that, what do we have to know? Highest change in open interest, out of money call and put. Where is the highest increase? It tells you which strike are they operating upon. It tells you which strike are they operating upon. And the last one, average price of the option buyers and sellers. So most of you got it right, 155. Let us try. Okay, I think so. Let's check from here. Okay, so they're updating the records. We'll come back to it, but most of you got it right. 155 was the price. Right? So what does the open interest do? Open interest is the summary of the option buyers and sellers in the market. They reflect the market sentiment in total, and you need to work along with futures open interest and price action to understand the holistic or the bigger picture of the market. So we discussed what is Bhav copy, compilation of day open, high, low, close, values and volumes, delivery for open interest, cash and derivative segment. So now let's come down to the put call ratio. What is the put call ratio? What did we discuss? Total number of puts to total number of calls, right? Total number of puts to total number of calls, right? So when the number is between 0.9 to 1.1, that means the number of put writers to the number of call writers are in the neutral range. I cannot assume that anyone has an upper hand, nor the call writer, nor the put writer. Moment the put call ratio goes above 1.1, I know that the put writers are 10% and above in number. compared to the call writers. This is a bullish sign. It is a bullish sign. Am I making clear? When is a put call ratio giving you a contrarian signal? When the markets have already gone up, it is already risen, and the put call ratio is greater than 1.5. That means despite the markets going up, there is an expectation that markets will go up further. If that happens, that means there is a possibility. It does not mean the market has to reverse. There is no concept called has. But in case if the reversal happens, the reversal will be very quick and very sharp to the downside. In case if the reversal happens, the reversal will be very quick and sharp to the downside. Am I clear? $1.1 to $1.55 bullish, right? Why? Rohit sir, why is it bullish? Because the total number of put divided by total number of calls. Total put is higher than the total number of calls. So supposing if the put written is 5,75,000, call written is 5 lakhs. What do? We divide the total put divided by the total call. So can you see this? The put writers are 14% more than the call writers. Can you see this? Am I making sense? Is this clear? Good. On the downside, when the put call ratio is less than 0.9, right? So let us assume that the put writers are 4.8, call writers are 5.9. That means there are more call writers compared to the put writers. When this number is 0.9 and below, it is bearish. It is bearish. Now the markets have already fallen, right? And if you see that still the number of call writers are substantially higher than number of put writers. 0.65 and below after the fall. In case if the market reverses, the reversal will be very quick. It might just happen for 1 or 2 days, but the reversal might be very quick. Am I making sense? Are we on the same page, all of us? Yeah, this is market sentiment, Abhishek sir. This is market sentiment. When the market is bullish, Chintan by substantial rise. Substantial rise. There is no measure as such. It cannot be a 100 points rise in Nifty. It can be a 250, 300 points rise. It can be a 500, 600 point rise in Bank Nifty. So Ramakrishna sir, if the sentiment is 0.8 and the market is not falling, then you will see the put call ratio coming into neutral territory. Right? Neutral territory. I said Chintan Bhai, we cannot put this thing. It could be anywhere between 5 to 8 days. Right? Good. Any questions till here? Good. So how many people? Oh, Champak bhai, it will be very quick. If you start looking for reversal patterns, you will never be able to catch this option reversal. It will be very quick. It might be just in 1 hour, Nifty might go up by 100, 120 points when the PCR is below that level. The setting is very sharp. It's very difficult to time. I will show you in the live class how to keep a track of the put call ratio. Right? We will discuss that. Just go and see the dividend. Yeah, Abhishek sir, we will come today. How to take a trade. The trading rules are led by cut losses, ride winners, keep bet small, follow the rules without questions, know when to break the rules, etc. Theoretical pricing of option premium is derived from a mathematical model known as Black-Scholes. The value of the option is determined by using the inputs. Underlying price. What are the inputs? Strike price, number of days to expiration, implied volatility, interest rate. So these are the parameters in the Black-Scholes. If you put in, the theoretical price of options will come out. We all know that we know the underlying price. We know the strike price. We know the number of days. We don't know the implied volatility. We don't know. We know the interest rates. So what do? We go down to the option calculator. What is the site? www.option/price.com. Now what do? We put in all the parameters here. We don't know the volatility. So what we do here is we put in the various values of volatility and we match the theoretical price along with the last traded price of option. Once the theoretical price is matched close to the last traded price, what do we come to know? We will come to know the volatility. So volatility is a measure which is included in the price of options. Now we know that. Volatility is a measure which is included in the price of options. So this Saturday we are going to have one full day on volatility. Right? So now what are the factors which are impacting the option premium? Greeks are called the factors or the statistical value which measures the risk in option prices with respect to change in certain variables. They are namely delta, vega, theta, gamma, rho. So the most popular Greek, what is it? Delta. What happens to my option premium happens to my option premium for 1 point change in the underlying? For 1 point change in the underlying. Whether my premium is going to go up by what points, I will come to. So if the delta is 0.5, that means if Nifty goes up by 1 point, my call premium will go up by 1.05 points. If Nifty comes down, my call premium will come down. Am I making sense? Other variables remaining the same. Very good. So the delta of a call option is between 0 to 1. So Sukhbir sir has bought a call option. Long call. Sukhbir sir, if you bought a call option, Nifty goes up, what happens to your call option? Will it go up or down? Go up. Will your profit and loss go up or down? Sukhbir bhai, it will go up. So can you see the same direction? If you see here, Nifty comes down, call value comes down, same direction. So the long call delta is positive. Are we all on the same page? My friend Ramakrishna sir sells the 15,800 call. He sells. Nifty goes up. What will happen to the call premium? It will go up. But he has sold the call. His profit and loss, he will be at a loss. Opposite direction. Nifty comes down, call comes down, but he makes money. Opposite direction. So if the delta of the long call is positive, the delta of the short call will be negative. Yes or no? Are we all on the same page? Anand sir, what did you have for breakfast? Lovely. Subramaniam sir, did you have dosa today or uttapam? Puri, lovely. So let's come down to long put. Subramaniam sir has bought a put. Nifty goes up. What will happen to the put? Will it go up? No, it will fall. Will Subramaniam sir make money? No. Opposite direction. Right? Abhishek sir, Bengali dish Luchi Puri. Very nice. Bengali is known for good non-veg food as well as sweet dishes. Opposite direction. So delta of a put is long put negative. Are we all on the same page? When Nifty falls, profit goes, put value goes up, I make profit. Opposite direction. Now, Anand sir has shorted a put. Nifty goes up. What will happen to the put? It will go up. Profit or loss? Profit? Oh, I thought it was a loss. Same direction. Nifty falls. Put value. Yeah, where am I wrong? Shiv sir. If Nifty falls, put should go up or go down. Same direction. Here is the direction same or opposite? Just I did this, no one stopped me. Market goes up. What will happen to the put? Will it go up or down? Then why did anybody not stop me? Then why did not anybody stop me? So I will make mistakes as I go forward because I'm very poor in studies. So you need to stop me. So I will understand whether you're doing revision or not. Oh, thank you, Ramakrishna sir. You're the only one revising hard. So the delta of a short put is what? Navan sir, what is the delta of a short put? Positive or negative? Yes, Navan sir. Yes, waiting for you. Very good. Very good. Are we all making sense here? Good. Now, what did I teach you, Naman sir? Delta of at the money call 0.5. Delta of at the money put minus 0.5. Plus minus. That means the delta of the call, delta of the put 0.05 minus 0.0. And to head towards in the money, what happens? Delta goes towards 1. For the call, minus 1 for the put. And to head towards 0, what happens? Delta goes, as you head towards out of the money, 0 for the call, 0 for the put. Are we all on the same page? I showed you this example yesterday, right? One way of interpreting delta is the probability of this option strike closing in the money. So basically, Sudeep sir, how are you? Why were you not there in the last class? So, Sudeep sir, if you buy a call which has delta of 0.5% or delta 0.5, right? You have bought a 15,700 call which has a delta of 0.5 at 100 rupees. Can this 0.05 delta tell you that you will make a profit or loss 50% of the times? Does this delta tell you that you will make a profit or loss 50% of the times? Who says no? Who says no? Yeah, Sukhbir bhai. Why no? Because all the others are yes. I want to know your answer. You are different. Please understand, what is it telling you? It is telling you the probability of the option closing in the money. It is telling you that there is a 50% chance it will close at 15,700 and above. It is not telling you whether it is going to close at 15,701 or 16,200 or 16,600. So this has nothing to do with your PL. It has only to do what is the probability of closing above 15,700. So it will not tell you what is going to be your PL. Did you get this? It can just close at 15,701. So we don't know. Sir might be at a loss. So it cannot tell you your profit and loss probability. It can only tell you the probability of closing above 15,700. Absolutely correct. But if you're paying a premium, so even if it closes at 15,780, you are still at a loss. So it does not tell you whether you're going to be in profit or loss. The delta does not tell you that. The delta only tells you what is the probability of the underlying closing in the money at expiry. Am I clear? Are we all on the same page? So it will tell you there is a 50% chance that Nifty will close above 15,700. So Navang sir, is this concept clear? Good. So that's the reason we take these practical concepts to clear our mind. I'm not here to make you come down. We are all here to rise up. We are all here to learn. No one comes down if he answers and he's not able to answer. But at the same time, we need to revise. We need to go forward. That's the part of life. At the money, 0.5 minus 0.5. In the money, 1 minus 1. Out of the money, 0, 0. Delta neutral strategy. What is it? Balancing positive and negative deltas. Overall delta of the total asset should be equal to 0. So there's a question asked. If you do delta neutral, probability of in the money is 0. Okay, Chintan bhai, we'll discuss this. So the strategy has always, whatever you do, the strategy has following purposes. No shift fall. Delta is the rate of change of premium. For every 1 point, change in underlying. What you are talking about, the speed comes from the next one, which is called gamma. Okay? That speed is derived from gamma. So the strategy has the following purpose: profiting from volatility, profiting from time decay, and hedging. So what is profiting from volatility? When a huge movement is expected in the markets, but we don't know the direction of the market. So please understand, Chintan bhai, I'm expecting big movement, but I don't know which side the movement takes place. Like the election, we did a study. Every election, there's a 5 to 6% move, but we don't know the side. Since we don't know the side, upside or the downside, what do? We create a delta neutral position. To take advantage of the big price move that is going to happen. So once a delta neutral position is created, anytime there is a big price move, we will make money. How? We will discuss this. Examples are long straddles and strangles. Same strike call, same strike put, long straddle. Both call and the put are of the same underlying, same expiry. The delta of the call and the put combined is near to zero, right? So how do we do that? You remember I showed you the diagram. Call strike plus combined premium, put strike plus combined premium. Same quantity, yes. So ultimately you come here, right? This is called a long straddle. Now, can you see if it goes up extreme way, I will make money, unlimited profit. If it goes down in an extreme manner, I will make profit. If it remains in a range, I will lose money. So that is why I took you to the elections, because in the national elections, I know it is a path-breaking event. New government for 5 years. I told you yesterday, if you have lesser money, you can do a long strangle. Profits will be less, the losses will be less. No, it can never be the same. Strangle will always give you lesser returns than the straddle. Why? Because your investment is less. Straddle, bigger investment, bigger profits. Right? Now, when you do a strangle, what is the curve? Different strike calls. So something like this. Different strike puts. So your break-even points automatically go far away. So that, Abhishek sir, you have to do your own research. Everyone has to get into their own research to get in, right? Whether the one day before gives money. So I have done my research. In my research, I believe 7 days before the national elections, it gives you money, right? So the same way you do your own research and you check out what works for you. Event trading, you need to do your own research, right? So different strike call, out of money call, out of money put. Both call and put are of the same underlying, same expiry, different strikes, right? Long strangle. So do you know what is the break-even point? Let's practice this once more. 45 call at 2 rupees. 35 put at 1 rupee 60. What is the break-even point? What is the combined premium? rupees 60. So strike plus combined premium 48.6. Strike minus combined premium. Am I making sense? So can you see, always the break-even points will be far away in a strangle, but the premium outgo will be much lesser in a strangle than a straddle. So did I tell you? Did I ask you how will you make money during the budget? That was our homework. Ramakrishna sir, I think so, worked very hard. Very good effort. Very good effort. Sir, you did from my chain, option chain. Very good eye charts. Lovely. So what do you think? How can you make money during the budget? Yes, Avinash sir. So these strategies you don't find in Google. You're not going to find in Google. What happens during the budget? What happens? So when was the budget first of all? Yes, Anup bhai. Volatile. Very good. Okay. 1st of Feb. Okay. Okay, so this was the budget day here. Okay. Now my question to you all is, when do you see big movement during the budget? When? I think so. Ravindra sir is very close. Ravindra sir is very close. Do you remember when the finance minister speaks about direct taxes? We know that the budget is going to get over in the next 10 minutes. Once the finance minister comes to direct taxes, we know that the budget is going to get over in the next 10 minutes. So just 5 minutes in the direct taxes, you make a long strangle. If you see here, please check, the budget got over at around 12:30-35. And once the budget gets over, you hold it for the next 15 to 20 minutes only. Once the budget gets over, you are doing a long strangle only for the next 15-20 minutes. Can you see this big spike? So as I told you, the long straddle or a strangle makes money when there is a big movement either side. No support resistance. These are nothing of technicals. There is always a big movement once the finance minister starts reading direct taxes. Am I making sense? What happens in this case? The call will go up, the put will come down, but still you will make money. You have to exit after 15 minutes. Quick. You make money quickly. Is this clear? जब फाइनेंस मिनिस्टर डायरेक्ट टैक्स रिपोर्ट पढ़ रहा है, when he is reading the direct tax report, that means the budget is going to get over in the next 10 minutes. Anybody seen the budget? So when she or he reads the direct tax report, budget is going to get over in 10 minutes. So at that particular time, you make a long strangle. Abhishek sir, we are getting out in 15 minutes. What is the need for a stop loss? Our time stop loss is already there. So whether after 15 minutes the budget gets over, whether in profit or in loss, please book your position. Please book your positions. Am I clear? Yeah, if you're doing a long straddle also, there is no point of putting a stop loss because your time exit is there. You're exiting after 15 minutes, within 15 minutes of the budget. So what is the need of putting any stop loss? If there is no movement, you will lose some premium in 15 minutes. That's it. But most of the time, there will be movement. Let me show you the 2020 budget if I have one. Just see here, this was the 2020 budget. Can you see this big candle fall? So this was that 15 minutes, 150 points. So once the budget gets over, there is 100 to 150 points spike, which happens in the next 5 to 10 minutes. I don't think so, Vikesh bhai, you can catch the movement. It's not possible. Because the movement happens in a spike. Actually, you have not seen the budget, Vikesh bhai. Somit sir, you can do Bank Nifty also, but budget is more related to Nifty than Bank Nifty. Because it's for the industry, it's not only for the banking stocks. Right? So it's next to impossible to catch that big movement. Good. So is this clear? Long straddle, long straddles? Good. Now profiting from time decay. Yeah, Champak bhai, RBI credit policies are good. There are some policies where there is surprise. The other policies, nothing happened. Right? So now we come down. When the markets are expected to stay in a range When the markets are expected to stay in a range, delta neutral call and put positions are created. This is now profiting from time decay. So if I know that markets are going to be in a range, I will create a delta neutral call and put positions. Right? So we all know that option premium has time value premium. If the market remains in a small range, what happens? The option will lose time value premium. Are we aware? So we want to take advantage of this time decay. So when I know that the market is going to remain in a small range, this decay of time value premium happens. So if I can create a short straddle or a strangle, I can gain that advantage. So if I can create the short straddle or the short strangle, I can gain that advantage. So what is the short straddle? A short straddle is just the mirror opposite of the long straddle. I'm selling call, same strike, as the put, same strike. Both call and the put are of the same underlying. Both call and the put are of the same underlying. Both belong to the same expiry. And the delta of the call and the put combined is near to zero. Is near to zero. Right? Same strike call, same strike put. Both call and the put are of the same underlying. Same expiry, near to zero. So when I'm selling a call, I'm selling a put, I'm receiving the premium, yes, combined premium. So let's do a Bank Nifty example. So we go to Opstra. So we take the weekly expiry, 34,800 call, sell. 34,800 put, sell. Combined premium is 537. So now, what will I do? Yeah, weekly spot. So 34,800 call. Let's check the delta. So near delta neutral, right? 537. So what is the combined premium? 537. When I add to the call, 34,800 plus 537 is 35. 337. 34,800 minus 537. This is the combined premium. 34,263. So if it remains in this range, I will make money. But if it moves outside this range, I will lose money. Right? If it remains in this range, you will make money. If it moves outside this range, you will lose money. Are you making sense? Yeah, this payoff is always on the last day, my friend. This payoff diagram is always for the last day, expiry closure. Estimated margin, sir, 1,73,000. Someone was asking me the margin. Loss is unlimited. Why? Can you see this loss? Right? First of all, can you tell me if I do intraday a long straddle or a short straddle, what is profitable? Will long straddle be profitable or short? Why? Abhishek sir is saying none. Lovely. Have you tried anything? Has anyone tried anything? Okay. So before you try anything in life, you must always validate, I've told you. So there is a site called stockmob.com. Avinash sir, we are here to break this chain. Because you tried not knowing the results. So let us do a small testing. Long straddle. At 9:30, I'm buying the call and the put. Okay? At 9:30, I am buying the call and the put at the money strike. And I'm exiting at 3:25. Right? Let us backtest it for the last 1 year. This is an engine, backtesting engine. Right? So let us backtest this for the last 1 year, July. So what are we doing? At 9:30, whatever the Bank Nifty price is, we are buying one lot of call at the money, one lot of put at the money, and we are squaring off at 3:25 the next day. So this will give me the result. Can you see? If I'm doing the long straddle, same day, sorry, not the next day, same day. So if I'm doing it every day, 1,75,000 rupees loss. Average, I'm losing 767 points. In rupees terms, 70 trades are profitable, 150 trades are loss making, 49 expiries. Maximum loss is 10,055, maximum profit 24,000. Average profit on winning days 4118. Average loss 2931. So did I tell you this long straddle will not make money every day? Did I tell you it will only make money on events, elections? Let us see what happened on the 1st Feb. Let us check what happened on the 1st of Feb, budget day. Wow, the maximum profit came on the 1st of Feb. 24,836. So can you see this? You can get the monthly profit and loss. So most of the months it is negative. Only January it was positive. February it was positive. So can you see doing a long straddle? Loss-making venture. Abhishek sir, is this clear now? In life, there are answers to be found. If you close your questions with lock and key, you will never find answers. So if I know that, long straddle does not work other than event. So what will work? Opposite of a long straddle is what? Short straddle. So now let me backtest the short straddle. The opposite results will come. Just see that the opposite result. It will be a profit of 1,74,000. Profit making trade 70%. Average profit. So now I've changed it. Now I've given you one strategy. That every day if you sell the call and the put at 920 and you cover it at 325, you can make 767 rupees there. Your average winning trades are 158, losing trades are 70. But can you see this max loss? Is this too much? Can I absorb this loss? No. Ramakrishna sir, no. 24,000 rupees if you have a loss one day, next day you will not trade. Yes? Budget day, yes. Very good. So now let us do one thing. Let us add a stop loss. So that if in my option premium, if 70 rupees is crossed, 70 points, sorry. No, we don't need to exclude any day. So what are we doing? Yeah, it is a delta neutral. 70 points. Abhishek sir, you can backtest. You can test 90, 100, whatever you want. Right? So when I'm doing 70, that means it's about 140 points of Bank Nifty. So my stop loss as per the delta. Wow, can you see this? My profits have gone up to 1,79,000. Can you see now my maximum loss? My profit remains the same. But my maximum loss has come down. Can you see this? Wow. So by the help of a small strategy, I have maintained my profits. And I've got you a winning strategy. We all are struggling to get one winning strategy. Your maximum loss is reduced, your drawdown is reduced. Now you can trade. You know that you can absorb a 14,000 rupees loss. Now can you see most of the months you are positive? अभिषेक सर 2 लाख रुपया का मार्जिन में अगर एक साल आपको 1,50,000 आता है तो क्या परसेंटेज रिटर्न है? In a 2 lakh rupees capital in 1 year, if you are making 1,40,000, what is your returns? 80%. Because I have not taken. Yeah, in this case, we are not going to do anything. 9:30, you take this trade. You put your stop loss and you go to your office. 9:30, you take the trade. Right? You put in your stop loss and you go to your office. So once you do that, you are done. So I've deducted 30,000 rupees as brokerage. So welcome to the world of trading. So if one stop loss is triggered, you will continue the other. The maximum stop loss of 3,500 is 140 points into 25. So when both stop losses are triggered, you will lose 3,500 rupees. Am I clear? So I highly recommend you to go through take the subscription of StockMonk and experiment your own strategies. This is Bank Nifty, not Nifty, my friend. We're talking about Bank Nifty. Right? 70 points, not percentage. Absolutely time value premium. We are eating the time value premium. Yeah, you do it. You do that, sir. You backtest and you send the report to me. Right? Whatever you feel like the strategy you want to do, backtest and send the report to me. Yeah, every day you need to build. Don't change this strategy. You don't need to change this strategy. No, it's not free, Yash bhai. It's a paid software. दुनिया में पानी भी फ्री नहीं मिलता, यश भाई आप. Right? So what I'm going to do is I'm saving this Excel sheet and sending you all. This software is a backtesting software, right? इसको हाथ से एग्जीक्यूट करना होगा. Nabam sir, did I talk to you about Nifty? It is Bank Nifty. So let us start with a small step, then we will think about Nifty. Let us do step by step. Right? First, learn to master one instrument. Ramakrishna said, don't put me into confusion. What is your question? You have made me a demigod. You think that I will know all the answers. What is your question? No one is going to do this in the live market before we have the live session. I'm going to take this trade myself in the live market, and then everybody is going to start. This is not the spot price, Ramakrishna sir. Option premium. Right? Shiv sir, let us first try in Bank Nifty. You look in Bank Nifty now. What is the hurry? You look in Bank Nifty. Then we can always do Nifty. What is the problem? But start with first Bank Nifty. You must learn first. Money is secondary, as I told you. Even Dawood Ibrahim has made billions of dollars. But the purpose was not right. Right? Add the money, Abhishek sir. What is add the money? Strike equals to spot. Very good. No, Ramakrishna sir, there is no point. Once exited, finished. The day is over. We will play for the next day. So this is the file you will receive. Right? You will receive this file. Every day if you see, let's take one example. Last day's example. 2nd of July. So what was the Bank Nifty spot price? 34,690. Right? So what is the spot price? 34,690. So what strike will you select? 34,700 call. Right? So what is the 930 price? 34,700. $333. 930 price for the put is 320. Right? So 70 points above that I will put the stop loss. 70 points premium. My call stop loss got triggered at 1 o'clock. My put stop loss did not get triggered and I exited at 325 at 203. So the total profit was 1170. See, 30th of June, both my stop losses got triggered. Price of Bank Nifty was 34,956. So 35,000 call, sold at 198. Put sold at 195. Call stop loss got triggered at 1046. Put stop loss got triggered at 340. So I will be sharing this sheet with you. Anup bhai, I have given you the machine. You can take out your time. You can backtest it. What you feel good, you can do. Right? There is no one stopping anyone. For us, we felt 9:30 comfortable, office going, morning people, 325 last evening. So you do the trade, go to your office. People are all working. Come back and go at 325, cut your trade. If you can find anything good, please share with us. As a group, we are all ready to learn more. Right? But 930 is a trade you must have in your portfolio. You can take other time, but 930 is a good trade to have. Why? Because the markets are starting in the morning and big trends develop in the morning. Right? Big trends develop in the morning. So a lot of my students are doing this for a living. A lot of my TMP students are also doing this for a living. In fact, I'm also doing this for a living. Right? I wouldn't lie to you. This is my bread and butter also. So truth needs to be told. Yeah, 1,77,000 for a lot. One pair you require 1,77,000. Is this clear to all of you all? So this we are going to do in the live markets. Chintan bhai, I told you, you can do your own back testing. This is a trial and error. This is not something fixed कि ये करना ही है 70 पॉइंट. आपको अच्छा लगे तो आप 50 भी कर सकते हैं, आपको खराब लगे तो आप 100 भी कर सकते हैं. It is on your comfort level. We have designed a strategy for the comfort level of our students. We don't want to risk more than 3,500 rupees. We want to make money, small money. We don't want to become multi-billionaires. Every month we want to be profitable. छोटा-छोटा amount. साल में हम लोग को compared to a capital, we want to do that. Rohit bhai, that you have to check with Zerodha. But most of the people are shifting from Zerodha. Right? They're going to other brokers because Zerodha is closing lot of strikes for trading. Vikesh bhai, what is your trading capital? Yeah, Vikesh bhai. You can do 2 lots, but first you start with 1 lot. Anand bhai is asking which is the best platform. $1.7 lakhs you require for doing 1 lot. Mine is a local broker. Right? If you can get Odin from some broker, it is very good. Odin platform is very good. Odin, ODIN. Right? ODIN. Right? N for Nagpur. So Ramakrishna sir has already said Kotak is providing Odin. Right? So type Odin and stock market software. Not hacking software. It's a stock market trading software, right? Great. Yeah, one must always have 2 brokers. In fact, I'm also using Best. I'm also using BEST, BEST, right? So Anup Bhai is using BEST. So Anup Bhai, you are a broker? Are you a broker? Which firm are you working? Which one? Oh, you're from Magma. Okay, okay. Good, good, good. Lovely. So what made you do this program? Anup Bhai, I'm also from India. I know about Magnum. So what made you do this AOT strategies? So now friends, you can catch Anup Bhai. Anup Bhai can give you a terminal. Right? So now you have Anup Bhai to help you. So you don't need to go anywhere. In your own house, you've got Anup Bhai. He can give you Odin. He can give you BEST. BEST is as good as Odin. I will show you BEST tomorrow when we have a live trading session. So Anup Bhai, so are you a research analyst out there? Okay, so you're in the. So what position do you hold? So you have a clientele position. Okay, good, good, good. Right. So let us come back. Any questions? Short straddle. Is it clear? So in the mail, in the break time, I will be sending you the file. Kindly go and see each and every trade which is back tested. Now we have the short straddle, market neutral strategy. You're not aware of the direction, but you're expecting range bound movement in either direction. So what are you doing? You are selling the call. You're selling the put, which are out of money. Same underline, same expiry, different strike, delta equal to 0. Delta equals to 0. Right? So in this example, you are selling a 45 strike call. At 2 rupees. You are selling a 35 strike put at 1 rupee 50. So the combined premium is 3 rupees 50. Right? So 45 plus 3 rupees 50. 48.5. 45, 35 less 3 rupees 50. 31.5. Am I making sense? Good. So again, like the short straddle, the short strangle you will do when you are expecting a range. When you are expecting a range. So in the small movement, you will make money. Maximum profit is the premium received. Maximum loss is unlimited. Right? We will discuss this. The volatility should be high. We will discuss this when we do volatility on this Saturday. So is this clear? So like a short straddle will give you money in a range bound market. So the short strangle will give you lesser profits because the premium received is lower, but it has wider range. So your probability of making loss in a short strangle is lesser than in a short straddle. Am I making sense? Am I clear? Good. So congratulations, you have done 4 strategies. Long straddle, long strangle, short straddle, short strangle. Now you know how to play these strategies. I'm sorry, Rohit, I did not understand your question. Okay, so it's out of money call. In a short strangle, we are doing out of money call. Out of money put. Right? You remember yesterday, we took out the delta neutral position. So out of the money call will have strikes which are away from the current price. Out of money put 35. It will be below the current price, the strike. So are we clear with this? Out of money call and out of money put? Good. Rohit bhai, do a quick revision today. Now the last part is called portfolio hedging delta neutral. So what is called portfolio hedging? So Champak bhai, he has got Reliance delivery or Reliance futures. Right? He has bought Reliance futures. Now there is a threat of India-Pakistan war. What is there? A threat of India-Pakistan war. Because of the threat of India-Pakistan war, Reliance, all the plants are near to the border. So Champak bhai has got scared. What is he trying to do? He says if the war happens, I will lose money. So what he's doing? Do you know that we know something that buying a put means? Insurance or protection. You remember the car insurance thing? So what does Champak bhai do? He buys a 2140 strike price put. Right? Now go down. Can you see the delta? It is still delta positive. So what is the payoff diagram? Just see the payoff diagram. So now his losses is completely fixed. Champak bhai, once he buys the put, he cannot lose more than the premium of the put. So 2140.58. This is the premium he is paying. So his maximum loss is fixed, and he will add this 58 rupees premium to the future price. So his profit is unlimited. But my friends, this is not delta neutral. If I have to make delta neutral, what will I do? Thank you, Somit sir. Add one more put. So can you see this? Now it has become delta neutral. So when I added this put, you remember we were like this, right? We were like this. So now when I've added this put, it becomes like this. So any side, where have you seen this chart? Is it something like the long straddle? Yes. Is it like the long straddle? So any side extreme movement, now Champak Bhai can make money. So when I am basically doing delta neutral, the delta of the future on the cash is 1. When I'm buying 2 at the money put, it becomes delta neutral. So this is the payoff of the long futures like this. So when I buy a single put and a future, it becomes like this. And when I buy a double put, it becomes like this. So sometimes when you feel like you want to hedge against a certain event which is not in your control, what you can do? You can use a delta neutral strategy, where in case if the market moves either side, you can make very big money. If the market moves either side, you can make very big money, right? When you're selling the call, it is different. We will come to that later on. That is not hedging. This is the common mistake people make. They buy the future, they sell the call, they say we have hedged. This is wrong. Hedging is only in cases of losses, right? Only in cases of losses. Am I making sense? Is this clear? Good. So either you can have a delta positive. A lot of people in practical, how many of you are trading in futures? So they generally have this type of a trade, delta positive, right? So you buy futures, you buy 1 put, right? They don't buy 2 puts. But when you want to make delta neutral, you have to buy 2 at the money puts, right? Am I clear? So we know that the delta of the underlying is 1. Because of certain underlying factors, there is a risk in the market and you want to hedge against that risk. So you use the portfolio of delta neutral to do it. So against the long futures, you're buying 2 at the money puts. That means your delta is fully hedged or neutralized. So either side, if there is movement, you will make money. So you have 2 break-even points like in a long straddle. So you add the premium to your future price. So if you bought a 2030, you add the premium to your future price. Is this clear? Good. No, Chintan bhai, you can't do this for your cash hold. Yeah, you can do this for Reliance Cash also. If you have Reliance Cash and you want to hedge, you can do this. No problem. Right. So we have had a exhaustive 1.5 hour session. So we need to take a break. Right. So it's 11:05 by my watch. Come back by 11:15. See you at 11:15. Welcome back. How was your break? Great. Great. So Somit sir, what did you have? Cup of tea? Lovely. So Sukhbir sir, are you there? Good, Pramod bhai. Good. So how is your confidence now? Good. Good. So we are all learning. Even I'm learning with you all. We are all learning. That's a part of life. We learn to better ourselves every day. So what is grammar? Now we're coming down to what is grammar. Wow, that's all the more good, Sumit sir. You don't have any backlog. So you're learning from scratch. Right? That's a good part. Gamma is the measure of rate of change of delta. What do you mean by rate of change of delta? So can you see this slide? When you are moving from at the money to in the money options, can you see from 0.5 it is going to 0.65? This 0.15% increase in delta is gamma. So when you are falling to 0.4, this minus 0.5, minus 0.1 fall in delta is called gamma. Very good now, Ravindra sir. Gamma is nothing but the delta accelerator. Is this clear? The rate of change of delta is called gamma. Gamma is highest. Before I come, it is reflected as a percentage to every 1 point move in underlying. So for every 1 point change in Nifty, what will be my change in delta or gamma? Gamma is nothing but change in delta. For every 1 point move in Nifty, what will my gamma go up and what will my gamma come down? Okay. So the gamma continues to change. Please understand, gamma is not the same. For every strike price, the gamma is different. Gamma is highest for at the money strikes and will go on decreasing as you move towards in the money or out of money. Gamma is highest for at the money strikes and will go on decreasing as you go towards out of money or in the money. So I believe a lot of you are still confused with gamma. Still confused. How many of you are confused? Pramod sir. Yes, thank you for telling me. So we must always, when there is confusion, you must take a live example. That is the beauty of options, right? Nifty spot price is 8326. You are buying a strike price of 8,400 call. What is the premium? 26 rupees. So what is the price of the call? 8,400 strike price, 26 rupees. What is the price of Nifty? 8,326. So we know the delta is given at 0.3. What is the delta given at? 0.3. What is the gamma? 0.0025. Now Nifty goes up by 70 points. What happens to Nifty? It goes up by 70 points. Okay. What will be the new delta? No, new delta and the new premium. So we all know if Nifty goes up by 1 point, what is the delta? Option premium will go up by 30 paisa. Right? Are we all on the same page? Are we all on the same page? Yes, all. Who is confused? Who is confused here? You remember we did delta right now? So if Nifty goes up by 70 points, how much will the option premium go up? 0.3 into 70, 21 points. So Shehzad sir, the premium will rise by 21 points. So what was the old premium? 26 rupees. What is the new premium? 26 plus 21. This is the premium increase. So what is the new premium? Shiv sir, how is it 42? 26 plus 21 is 47. Are we all on the same page? Are we all clear? Good. Good. Shivastav sir, are you there? Shivastav sir, are you there? We seem to have lost him. Avinash sir? Yes sir, where were you sir? Are you with your family or are you listening to me? Yes. Good. So the new premium is 47. Now what is gamma? For every 1 point increase in Nifty, Shivastav sir, for every 1 point increase in Nifty, my gamma is 0.0025. That means my delta will change by 0.0025. For every 70 points, what will my delta change? 0.0025 into 70. Nabam sir, am I clear? Am I clear, all of you all? So that is 0. Can you see this? 0.175. Champak bhai, can you see what was the old delta? 0.3. What is the change in delta, which is gamma? 0.175. What is the new delta? 0.475. Are we all on the same page? Can you see how you are coming to add the money strike? How is your delta going towards 0.5? Nabam sir, can you see this? Let us do one more example. Spot Nifty 8396. Pramod sir. Nifty again goes up by 70 points. What happens? Nifty again goes up by 70 points. 8396 plus 70. What is it? Yes, Pramod sir. कितना होगा निफ्टी का वैल्यू? 8396 था, 70 पॉइंट बढ़ा, कितना होगा? How much? Vipin sir, are you there? 8466. Right? Yes, Vipin sir, are you there? What is the premium? 47. What is the delta? 0.475. Can you see this was the premium here? The delta is 0.475. So what will be your change in premium for every 1 point increase in Nifty? My option premium will go up by how much, Shushantoda? Shushantoda, for every 1 point increase in Nifty, what will my option premium go up by? Shushantoda. Were you there in my class yesterday? I'm waiting for you, Shushantoda. Shushantoda. For every 1 point increase in Nifty, how much will my option premium go up by? What is delta? How much will it go up by? Waiting for you, Shushantoda. How much? Take your time. What is delta? For every 1 point change in underlying, my option premium will go up by that much value, delta value. 0.475. So for every 70 points, Shushantoda, how much will it go up by? How much? Yes, Shushantoda, tell me. Yes, Shushantoda, you can answer this. Yes. Yes, Shushantoda. Do not worry, Shushantoda, just revise. What you need to do is just revise. You're a little out of sync. Right? You're just a little out of sync. It'll take one more revision for you to get in. Number of points into delta is equal to 33.25. Are we all on the same page? Are we all on the same page? Right? Now, what will be the new premium, Pramod sir? Pramod sir, what will be the new premium? Old premium plus the change in premium. What was the old premium, Pramod sir? Yes, Pramod sir, what was the old premium? Quick. 47. What is the change in premium, Pramod sir? Quick. Kitna rupiya? 33.25. Yes. So what is the total premium? Old premium plus change in premium. Very good. OP sir. OP sir, what is gamma? Here the gamma has not changed. 0.0025. So for every 1 point, gamma is 0.0025. For every 70 points, what is it? Yes, OP sir. 0.0025. Lovely OP sir into 70. That is equal to what? 0.175. So what is your old delta? 0.475. What is your change in delta, which is gamma? 0.175. So what is your new delta, Kishan bhai? 0.65. Are we all on the same page? Sushantana, don't worry, just revise. I was like you. I never understood anything at the first go. Anand bhai, gamma is not constant. Here in the example we have given, it is not constant. Right? Now, we take the third example. Now, Nifty falls by 50 points. What happens? Nifty falls by 50 points. What will happen? So what will be the new spot price? 8466. Can you see this was the old price? The new price will be 8466 minus 50. 8416. Are we all in sync? Yash bhai, are you there? Yash bhai, are you there? What is the old premium? 0.80.25. So what will be? So for every 1 point loss in Nifty, what will be the premium loss, Yash bhai? Yash bhai, 1 point Nifty गिरेगा, कितना premium घटेगा? What is the delta? 65 पैसा. 50 रुपया गिरेगा तो कितना गिरेगा? 50 पॉइंट. Lovely, Yash bhai, you're really good in maths. You are really good in maths. 32.5. Right? So what will be in the new premium? Lovely Ramakrishna sir, 80.25. Less change in premium, 47.75. Are we all clear? Good. Now what will be your new gamma? Sorry, new delta? 0.0025 into number of 0.4, 50. So what is it? 0.125. So can you see this? New delta is now again at the money. So now are we all clear? All in sync? Great. So now is the Josh on gamma high? Abhinav sir, you have to subtract. Why? Because the markets have fallen. So delta is heading towards from in the money to at the money. Is this clear? OP sir, is it clear? क्यों माइनस कर रहे हैं? निफ्टी गिरा है तो इन द मनी से नीचे जा रहा है, एट द मनी आ रहा है, तो डेल्टा घटेगा. So when the call comes from in the money to at the money, the delta will fall. From at the money to out of the money, delta will fall. So if the delta is falling, the change of delta will be negative. Is this clear? Good. So now let me take you to example. Someone was saying, can you see this? At the money strikes, delta is the highest. When you're going from in the money or to out of the money, the delta reduces. So let us do that. Let us validate that. Sorry, it is gamma. Not delta, it is gamma. What data is not available, sir? So can you see I've taken from in the money options to out of money options. So when I go to Greeks, can you see this gamma? So which is in the money? Highest gamma is in the money or at the money? Where? This is at the money. So when you're going towards in the money, it is falling. When you go towards out of money, it is falling. So gamma is highest for at the money strikes. So it is falling when you're going towards in the money or towards out of the money. Am I making sense? So have I proved it to you? So now let us take, we know that the gamma is highest for at the money. So let us take gamma for various strikes. 8 July, 15 July, same strike, 29 July, 26th August. Right? So now let me show you. Can you see as you are away, as there is more time remaining for the expiry, the gamma for the same strike is less, but as you're coming nearer to the expiry, as your time to the expiry is reducing, what is happening? The gamma is becoming more powerful near at the money strikes. This is only applicable to at the money strikes. As you are coming nearer to the expiry, and on the last day, what will you see? The gamma is most explosive. The gamma becomes 0.004, right? On the last day, gamma is the most explosive. Am I making sense? Am I clear? So the gamma is highest for at the money strikes. Can you see this? And as you are heading closer to the expiry, the steepness of the curve increases near at the money strikes. And on the last day, gamma is the most explosive. On the last day, gamma is the most explosive. Any questions here? So we all know now that at the money strikes is where the gamma is most powerful. Are we all on the same page? Anand sir, is it clear? So Anand sir, how will you take advantage of this? If I know that on the last day, gamma is most positive for at the money strike, how will I take advantage? Think about it and let me know. You have 10 minutes. Everyone, think about this. The previous slide shows lovely Nabam sir, lovely. We will come to it. Nabam sir, how long are you trading options? Previous slide shows gamma is near to the expiry. There is a sharp increase in at the money strikes. What am I seeing? That compared to out of money, at the money has highest gamma. And as you're coming nearer to the expiry, this at the money strike, the gamma is very steep and it keeps falling as you move towards in the money or out of the money. Unlike delta, gamma is always positive for call and put. So are we clear till here? Good. Now volatility and gamma, what do you mean by volatility and gamma? No, Champak bhai, delta neutral does not mean gamma neutral. Both are different, right? Gamma and volatility. Now, my friends, yeah, gamma is always positive for call and put. You saw the example we gave, Anand bhai. Underline went up, gamma influenced the delta, delta went up. Underline came down, we subtracted the gamma, right? Now we all know, and you saw that in the option calculator. If you have seen that in the option calculator, when we increase from 8 to 9, what did we see? There is an increase in premium, right? Did you see this? When we are increasing this to 10, is there an increase in premium call and put? Yes. Is it because of delta? Is it because of delta? Is Nifty going up? Is Nifty going up? No. So it is not because of delta. So which premium is going up? We all know intrinsic value premium does not change. So it is time value premium which is going up. So whenever there is an increase in volatility, Anand sir, which premium goes up? Time value premium. If the price of Nifty does not change, intrinsic value premium will not change. So are we all clear? So whenever the volatility is going up, time value premium is going up and the premium is going up. Whenever the volatility is falling, the premium is falling and the time value premium is falling. Are we all on the same page? Are we all clear? Good. Now, my friends, let's take a small example. Avinash sir. No, it is never the same. Every stock. So next class, we will discuss the volatility of stocks. Avinash sir. Bought the 15,700 call at 940. When Nifty was 15,710. The price of Nifty was 15,710. He has bought a 15,700 call at 65 rupees. At 9:55, news comes in that Prime Minister Modi is going to address the nation. Right? Prime Minister Modi is going to address the nation. Now they have not told the reason. Nifty does not fall. Nifty remains here. Same price. But the price of Nifty call goes up to 100 rupees. Will the volatility go up? We don't know. What is the reason Prime Minister is addressing the nation? Is it going to be a war with Pakistan? Or it is going to be a new law? Or is it going to be general topic against COVID? We don't know. Anand sir buys the call at 100 rupees. Avinash sir had bought it at 65. So what will be the break-even point of Avinash sir? Strike plus premium. Yes, 15,700 call 65 rupees. What is the break-even? 15,765. What is the break-even point of Anand sir? 15,700 plus 100. Right? So when the volatility is high, what do you see? There is an increase in premium. Time value premium increases. Yes or no? Yes or no? When the volatility is high, there is an increase in time value premium. When the volatility is low, are the premiums low? So my friends, what happens? When the volatility is low and when it hits the at-the-money strikes, the gamma impact is more drastic when the volatility is low. Why? Because your break-even points are lower. Can you see the difference between the two break-even points? When volatility is lower, it is 15,765. When volatility is high, it is 15,800. So when volatility is low, whenever there is an increase towards at the money strike, the impact of gamma is deadly. But when the volatility is high, the impact of gamma is there. Impact of gamma is there, but it is neutralized. It is neutralized. Can you see this light color line? The reason is very simple. Whenever there is an increase in volatility, the option premium goes up. And whenever the option premium goes up, it is the time value premium which is increased, which makes the gamma impact less drastic compared to when volatility is low. So what does that mean? When the volatility is high, option buyer, because gamma is the friend of what? Option buyer or seller? Champak bhai, option buyer or seller? Option buyer, not the seller. Why? Gamma influences delta, and delta influences the option premium. So it gains, option buyer gains, not the seller. Am I clear? What does gamma do? It influences delta. What does delta do? Influences the option premium. Did you see the example? How Nifty was going up? The value of the call was going up because of the delta. And how delta was going up because of gamma? Are we connecting the dots together? So when the option premiums are high, what happens? There is time value premium. Because of the time value premium, when the strike comes to add the money, when the strike comes to add the money, the gamma impact is less drastic compared to when option premiums are low in a low volatility environment. Are we making sense, all of us? Pramod sir? Pramod sir? Is this clear? कहाँ पे प्रॉब्लम है अभिनव सर? कहाँ पे प्रॉब्लम आया आपको? Yes, from where? Did you understand? Did you understand about the option calculator? Did you understand कि जब में volatility बढ़ता है और underlying price नहीं बढ़ता, when volatility goes up and the price of Nifty does not change, intrinsic value premium does not change. Your premium increase है, that is only time value premium. तो ये जो प्रीमियम बढ़ता है जब वॉलेटिलिटी ज्यादा रहती है, जो हमने एग्जांपल लिया 65 रुपया का जब प्रीमियम कम था और 100 रुपया का जब प्रीमियम बढ़ा, this 35 rupees increase in premium is only time value premium. Yes, अभिनव सर, जब वॉलेटिलिटी कम था प्रीमियम 65 रुपया था, जब वॉलेटिलिटी बढ़ा प्रीमियम 100 रुपया हो गया. So let us take this example. Nifty 15,600 था, राइट? और उन्होंने कॉल लिया, सॉरी निफ्टी था, या सो निफ्टी वाज एट 15,600, कॉल लिया 15,800, आउट ऑफ मनी कॉल खरीदा, राइट? So now what would happen when Nifty goes to 15,800? अभिनव सर, क्या होगा? कॉल का प्रीमियम बढ़ेगा? Yes. But what has happened? In a low volatility period, what is the break-even point? 15,865. What is the break-even point here? 15,900. तो जब ये निफ्टी बढ़ेगा 15,800, इनका प्रॉफिट जल्दी आएगा लो वॉलेटिलिटी में, इनका प्रॉफिट बाद में आएगा हाई वॉलेटिलिटी में. यस और नो? सो व्हाट हैपेंस, ये जो गामा का इंपैक्ट जब वो एट द मनी स्ट्राइक 15,800 में आएगा, हाई वॉलेटिलिटी में इंपैक्ट कम हो जाएगा क्योंकि इसमें ज्यादा टाइम वैल्यू प्रीमियम, और इनका टाइम वैल्यू प्रीमियम कम है, तो इसमें गामा का जो इंपैक्ट है और जोर से आएगा कंपेयर टू हाई वॉलेटिलिटी. इज दिस मेकिंग सेंस? ये क्लियर हुआ? यस अभिनव सर. सिंपल बात है. तो यश भाई, अगर स्पॉट प्राइस नहीं बढ़ रहा है, वॉलेटिलिटी बढ़ सकता है बिकॉज ऑफ अनसर्टेनिटी ऑफ इवेंट्स. What happens when Prime Minister is addressing the nation? There is uncertainty. If it is a war declaration, what will happen? Markets can fall or rise. Yes, Yash bhai. So because of that uncertainty, without the increase in spot price, premium can go up. Nobody wants to be a writer, so the seller is demanding more premium. When nobody wants to be a writer, the seller will demand more premium. That is why the time value premium goes up. Is this making sense? How does this help you? Very good question. Yeah, Chintan bhai, welcome. Volatility next class, full class. Very good, Sudhanshu sir. Lovely. So high volatility, it helps the option seller, right? Low volatility helps the option buyer. Am I correct? Why? Because the buyer break-even point is far away in a high volatility compared to a low volatility. So Sudhanshu sir is doing a lot of research. Now we come to the most important. Sir was asking, how does gamma help us? How is it helping us? Why do we need to do all this? This is the most important slide. Can you see the delta at the money strike? 0.5. 60 days, 2 months to expiry. So did I tell you that the gamma is highest near at the money strike? So can you see out of money? 0.32 delta, 0.08, 0.4, 0.4 plus 0.1, 0.5. 0.5 plus 0.1, 0.6. 0.6 plus 0.8, 0.68. So this is gamma, change of delta. So old delta plus the change in delta, new delta. Are we clear till there? This is in the money. This is at the money. Any question? Now on the last day, one day, that is Thursday expiry day, at the money 0.5. In the money, can you see the delta 1? Out of the money, delta 0. Now just see. Can you see this gamma? Near at the money. Can you see the jump? That's why did I tell you this? On the last day, near at the money strike, gamma is very high. This is called gamma hulk. So on the last day of the expiry, gamma for near at the money strikes are exponentially high. And then it falls like a cliff when you move towards in the money and out of the money. See this? There is no difference, major change in the gamma. But see here, last day. Shiv sir, now are you understanding why is gamma giving so much of importance? How many of you have seen on a Thursday a 5 rupee option becomes 150 rupees? How many of you have seen? A 5 rupee option becoming 150 rupees on the last day. This is because of this gamma. Ramakrishna sir, you haven't traded options on Thursday. It is because of gamma. How? Let's take a small example. Bank Nifty is trading at 34,800. Right? Bank Nifty is trading at 34,800. You have got out of money strike 35,000 call. You have bought 35,000 call out of money strike. Right? At 40 rupees. Right? Now, if Bank Nifty goes up by 100 points, right? So 34,800 to 34,900. How much will the premium go up by? 10 rupees. So 40 plus 10 is how much? 50 rupees is the new premium. Yes. Now if you are at 50 here, now again Bank Nifty goes up by 100 points, your premium will rise. So 10 plus 40, how much? 50. So for every 1 point, 50 paisa. For every 100 points, 50 rupees. So what is your new premium? 100 rupees. Now it moves here, your premium goes to 100. Now for another rise, when it goes to 35, 100. So this was 35,000. And again it goes up by another 100 points. Again, it goes up by another 100 points. Right? So 50 plus 40, 90. So 190. So 35, 100 is 190. So can you see from 40 rupees? Yeah. Can you see this? Delta plus the change in delta, 90. A new delta. So can you see this? How a 40 rupees premium went up to 190? Multiplier effect. This is called gamma Hulk. What is this called? Gamma Hulk. So for at the money strikes, the gamma on the last day of the expiry is explosive compared to at the money strikes when there are higher number of expiries, time remaining. So on the last day, what do you see? Near at the money strikes. How does the gamma change the premium? Did you see this? Delta is only 0.1, gamma is 0.4. So what is your new delta? 0.5. What is this? The premium jumps from 50 to 100. Again, delta 0.5, gamma 0.4. Premium jumps from 100 to 190. Why? Because can you see what is happening? The gamma influences the delta, and the delta influences the option premium. So here, because of the gamma, the delta went up. Because of the delta, the option premium went up. Am I making sense? Am I clear? Right. So on the last T, so Shiv sir, did you understand? Shiv sir, did you understand importance of gamma? So when you are selling a out of money option on the last day, and if you don't have your stop loss, what will happen? Yes, sir, you'll have to revise. You can lose your shirt. What do you mean by losing your shirt? I give you a small example. I have seen someone selling a call at 5 rupees and he went to work. He did not bother. He sold a call at 5 rupees and he went to work on a Thursday. And when he came back, he saw the value of the call was 1200 rupees. So he had sold something at 5 rupees. Maximum profit was 5. And he got an unlimited loss. 1200 rupees. Unlimited loss. Why? Because of this gamma Hulk. He had margin. Rohit sir, he had margin. Very simple. You will become an option buyer, Sudhanshu sir, or you will put a stop loss. So if you are selling something at 5 rupees, you will put a stop loss at 10. That's it. Because if you are going to make 5 rupees, you will lose 5 rupees. That's it. It's a common sense. अगर मेरे को 5 से 10 मिले, 5 रुपया ही मिलने को है, I will sell this. There is no need to repair a 5 rupees option. What will you repair? Right? So let it shoot. You can again enter again. If the price goes against you, your stop loss gets triggered, you can enter again with another stop loss after some time. You want to see an example of a gamma Hulk? Yeah, you have to buy out of money option. Then only you will get gamma Hulk. When that out of money option becomes in the at the money, that is where you will get gamma Hulk. Okay, so let us see the expiry. Shiv sir, see this carefully. How many times did you revise Shiv sir yesterday? Because everything is interlinked. If you don't revise, it will be difficult. So let me take you to the May expiry. When was the last day of the May expiry? (27th of May). So let me take you to the 27th chart. Right, we are here. Okay, 27th of May. This was not a very big move, right? So let us assume. So you need a bigger move. So let us assume that you are here at 11:45. So let us take the 15,300 put, right? Let us take a better example. Let us take a Bank Nifty example. In Bank Nifty, Gamma Hulk works very well, right? Very well. So let us take this latest example, last expiry. So when was the last expiry? July 1st, right? July 1st. Okay. So let me take you to the 34,600 put at 1 o'clock. Okay, this chart, can you see all of you? 1st of July. $34,600 put. Right? Now just can you see this price? What was the price? So let me take you to a 5-minute chart. It will be more easier. Right? So can you see this price here? 8 rupees. From 8 rupees, it goes to 25 rupees. Can you see these spikes? Can you see this price? 26 rupees, it goes to 46 rupees. So now let me take you to the 34,700 put, which will give you a better indication. One strike out of the money. In the morning at 1 o'clock, just see here. What was the price at 1 o'clock? 17 rupees. What was the price here? 50 rupees. Can you see it went up by 3x? Again, just see the price came down to 12 rupees. Where did it go up? 40 rupees. So this multiplier impact 3 times, 5 times, 10 times on the expiry. When Bank Nifty is falling from in the money, sorry, from out of the money to in the money, it is going. That is where this multiplier impact will take place. So in this example, just look at it. Look at the Bank Nifty price. What was the Bank Nifty price? 34,800. It fell down to 34,600. So I had bought a 34,700 put. As Bank Nifty fell and it came to at the money, the Gamma Hulk came into play. As it came down to in the money, the Gamma Hulk came into play. Now is it making sense? So on the last day of the expiry, Gamma Hulk comes into play. So let us take a more volatile impact. Let us take a volatile expiry. Yeah, 17th of May, 17th of June. Right. Can you see this? 17th of June. Let's check. What is the price of Bank Nifty? 34,800. So 17th of June, expiry. 34,600 put. So Bank Nifty in the morning was 34,800. See the price in the morning, 17th, right? It opened at 103. The price came down to 35, right? And again came down to 19 rupees. Just see, from 19 rupees, it went up to 175. 10x. The low was 15 rupees. From 15 rupees, it went up to 175. Multiplier impact. Again closed at 0. This is the power of Gamma Hulk. Can you see? From you have bought a out of money strike. You have bought a out of money strike. Bank Nifty was at 34,800. You bought 34,600 put. So when Bank Nifty fell, the Gamma impact started happening. The Gamma impact started happening. Is this making sense? Good. Champak bhai, please back test the long straddle. See, Gamma is only helping you if it remains there. If the market rises again, the Gamma impact will again go away. So if you are trading the gamma hulk, you need to be the scavenger. Take a trade quickly, exit quickly. Take a trade quickly, exit quickly. Am I making sense? No, sir. Gamma has nothing to do with news. Gamma has totally doing with from at the money strikes to where the gamma comes in. So when you have bought a out of money strike and it goes to at the money, in the money, your gamma impact helps you. Is this clear? Good. Shiv sir, is it clear now? Did you see this gamma impact? A 15 rupees put became 150. Why? Because this gamma at near at the money strike. So when you had bought the 37, 34, 600 put, what was Bank Nifty? 34, 800. So when it fell down, this is where your, when it fell to 34, 700, this is where the gamma impact started taking place. 34, 600, 34, 500. These three strikes, the gamma impact took place. From 34, 700 to 34, 500 Bank Nifty fall gave you that multiplier impact in your option premium. Right. So what we have seen that the near expiration, gamma and delta value see an explosion at the money strikes as shown in the last slide. While comparing to the last 60 days to expiry, there is a normal increase in gamma. So the longer the expiry, lesser the gamma impact near at the money strike. As you come nearer to the expiry and on the last day, the gamma impact is a magnifying scale, which is known as the gamma hulk near at the money strike. Any questions regarding delta and gamma? Any questions? So basically now, my friends, did you understand gamma is nothing but a delta multiplier, and gamma is majorly affecting at the money strikes, near at the money strikes, right? Now on the last day of the expiry, if you have the ability to catch buying on the option strikes, and if you have good luck, you can make money in gamma hulk. It only happens on the last day after 11:30 to 2:30 is where the gamma hulk trade happens. Okay. Now we come down to the next Greek, which is theta. Theta is the measurement of option time decay. I think so. This is the most easiest. It measures the rate at which the option loses time value premium as you move towards expiration. Measurement of time decay. It measures the rate at which the option loses time value premium. Theta is expressed as a negative number. So we all know that as a buyer of option, we pay something which is known as a premium to the option seller. Now the premium consists of two parts: intrinsic value premium and time value premium. Now this time value premium decreases with every passing day. Are we all clear with this? Are we all clear? This time value premium decreases. That is why we say option premiums are like ice cubes. Now at the rate at which this time value premium decreases per day is called theta. Per day, what will be my loss in my time value premium is called theta. Very good, Nagam sir. I'm very impressed with you. Are you an engineer, Nagam sir? Good. Now, my friends, Nadam sir is a buyer of 15,700 call. Right? Can you see what is the theta? 2 rupees 19 paisa. September 30th, he has bought a call. What is his per day call loss? So per day, he is losing 2 rupees 19 paisa. Now, let me buy an August expiry call. Anand sir is buying the same strike, August expiry call. Can you see what is the theta loss? 2 rupees 90 paisa. Right? Now, July expiry. Shiv sir is buying the July expiry call. What is the theta loss? 3 rupees 62, same strike. Right? Abhinav sir is buying 15 July expiry call. Can you see? What are you noticing? Theta loss is increasing as you are heading closer to the expiry. As the number of days are reducing, can you see the theta loss is increasing? Here you only have 6 days to expiry. 8th July. Per day, 9 rupees. When you have 12 days, per day loss is 5 rupees. When you have 21 days, per day loss is 3.6. When you have more than 2 months, per day loss is 2.8. So the next slide tells you the longer you have time remaining to expiry, the per day theta loss is lower. As you are coming closer to the expiry, the theta loss increases substantially. The theta loss increases substantially. And the maximum theta loss, when will it happen? Last 2 days and on the last day, because there is no time left for the completion of the expiry. Ramakrishna sir, now did you understand why are we doing the short straddle in the weekly? We want to eat higher theta. Higher theta. Avinash sir, am I clear? Because the closer you are to the expiry, higher will be the theta loss, which will be borne by the option buyer. As an option seller, we gain theta. That is why we are writing the weekly expiry, not the monthly expiry. Did you get this concept clear? Now, theta and volatility. Did you remember? Avinash sir, when volatility was high, was the premium, option premium high? Shiv sir, when volatility went up, did the option premium go up? What was that premium? What was that premium? Intrinsic value or time value? What was the increase in premium? Intrinsic value or time value? Time value premium. What is theta, Nabam sir? What is theta? What is theta? Loss, daily loss in time value premium. मेरा एक दिन में मेरा टाइम वैल्यू प्रीमियम कितना घटेगा, उसको थीटा बोलते हैं। Am I clear? Now when the premium is 100 rupees, you remember when the volatility was high, Nabam sir, what was the premium? 100 rupees. When the volatility was low, what was the premium? 65 rupees. You remember 15800 call? You remember the last example we did? Avinash sir and Anand sir. So when the premiums are low, in a low volatility environment, will the theta loss be lower? When the time value premium is lower, will the theta loss be lower? Per day loss will be lower. When theta value is higher, will the per day loss be higher? Pramod sir, am I making sense? जब मैं 100 रुपया का प्रीमियम ले रहा हूं और वो टाइम वैल्यू प्रीमियम है प्रमोद भाई, तो थीटा लॉस तो ये 100 रुपया का एक दिन में कितना लॉस होगा वो है, तो थीटा लॉस ज्यादा रहेगा। जब मैं 65 रुपया का ले रहा हूं तो पर डे लॉस कितना है, थीटा का वैल्यू कम रहेगा। So when the volatility is low, the theta loss will be lower per day compared to when volatility is high. The theta loss will be higher. Why? Because option premiums are higher, so theta loss will be higher. When the option premiums are low, theta loss will be lower. Am I making sense? Thank you, Shiv sir. Now, which strikes does have the highest time value premium? Which strikes? At the money, in the money or out of the money? कौन सा स्ट्राइक में ज्यादा टाइम वैल्यू प्रीमियम है? You remember the example we did? So let me take you back to that example. You remember? This was the total premium, colored is in the money. First one is at the money. So can you see? Let us calculate which strike has the highest time value premium. 137 plus 93 is 230, right? So which strike has highest time value premium? Is it at the money? Can you see in the money strikes have more intrinsic value premium, less time value. At the money strike has zero intrinsic value, highest time value premium. And out of money strikes have no intrinsic value but lesser time value premium than at the money. Am I making sense? So if at the money strikes have the highest time value premium, theta loss, Kishan bhai, किसमें ज्यादा होगा? Thank you, Kishan bhai. Where there is highest time value premium, theta loss will be the highest. So when we are going to do the live class, we are going to continuously monitor. Thank you, Champak bhai, for answering. When we are going to do the live class, we are going to continuously monitor at the money call put premium. Theta will be the highest for at the money options and will go on decreasing as we move towards in the money or out of the money. Theta will be higher in a higher volatility period. I discussed this. As this will increase the time value premium. High volatility, time value premium higher, higher theta loss. right? Now we come down to the last slide of the day and the least important of the Greeks, which is called the rho. Rho is the rate at which the derivative change takes place to change in rate of interest. What do you mean by this? You remember in this option calculator, we have this interest rate. Yes. Now if I increase this interest rate to 6%, can you see this option premium is going up by 1.5 rupees? Right? This change, what will be my change in premium because of 1% change in interest rate is called rho. So my friends, tell me one thing, does interest rate change every day? It changes once in 6 months. How much does it change by, Avinash sir? 0.25, 0.3? So if it goes up from 5 to 5.3, how much is my change in premium? 5 paisa, 10 paisa, 1 rupee. So let us assume that if this is 15,700 call, right? It will be anything. Interest rate is RBI. No, it will not impact. Only your risk-free interest rate. Only when RBI increases or decreases, right, will it impact. So can you see here? Theoretical price is 483, 30 days to expiry. I change this volatility. Current volatility is 11. Can you see what is the impact? Because 1% change, only 7 rupees my premium will go up. But we know that the interest rate does not change by 1%. It changes by 0.25. So what is the change? 2 rupees, 3 rupees. My call will go up, my put will come down. So if there is an increase in interest rate, my call will go up, put will come down. If there is a decrease in interest rate, my call will come down, put will go up. So if you see here in this strategy, there is no rho. Can you see in this strategy, they have not given rho. The reason is very simple. It does not materially impact. Why? Because number one, we are trading in options which are weekly and monthly. So our interest rate component is only for 5 days or 1 month, not a whole year. And interest rate does not change frequently, and there is no major change in interest rate. So rho as a derivative is not that impactful. Greek. Am I making sense? For every 1% change in interest rate, what will my option premium change? Right? So when interest rate goes up, my call premium will go up. If interest rate goes up, call premium will go up, put premium will come down by the rho factor. If interest rate comes down, my call premium will come down and the put premium will go up. Am I making sense? Am I clear? How much will it go up or down? I will get to know by rho. So if rho is written as 1.5 and interest rate goes up by 0.25%, then my option premium will go up by 1.5 point divided by 4. So 0.35. So my call premium will go up by 35 paisa, put premium will fall by 35 paisa. Am I clear? Good. Right, Ramakrishna sir, how was today's session? So get ready, do your revision. Interest rate is RBI, risk-free rate of interest. Interest rate is RBI, risk-free rate of interest. Keep your Josh on because we are going to trade and now we are going to have a structure in place. So I've discussed quite a few strategies with you all. So let me send you the Excel sheet. So the journey has started. So Ramakrishna sir, we have a live session. Are you a TMP member? Who is a TMP member? So just wait. Once I complete the live session, you will receive calls. There is Vinay. He will give you the calls in your group. So we have, I think so, a live session this week. Either on a Friday or on a Wednesday, I don't know. No, sir, you don't need to subscribe to anything right now. Please complete the course and then we will subscribe to whatever you want. Don't do anything right now. All right. There's nothing, we don't need to capitalize the difference between the call and the put premium. There is no need. Right? There is no need. Have you all received the file? Good. Thank you all for the lovely time you have given me. We are absolutely at the middle of the course. Challenges are what makes life interesting. And overcoming them is what makes life meaningful. Challenges are what makes life interesting, and overcoming them is what makes life meaningful. Here we are, and everything depends on you. How you make the most out of it. I am not perfect, and I don't claim to be perfect. The journey starts. All the best. See you for the live session. Let's make it happen. Right. Oh, thank you. Have a nice lunch. Don't forget not to revise. Bye-bye. Take care. Hmm.